Clark Hodges is back with us. We talked to him not too long, I think within 24 or 48 hours after the Brexit vote. And the big key word then was uncertainty when it came to the markets. He is back with us this morning, and we've had a chance to look at things, not only internationally, but of course here in the U.S., Clark. Are things playing out as people expected, or has the market rebounded a little more quickly than some might have thought?
I think the market's rebounded more than people thought. You know, the first 2 days after Brexit vote came in, there was a lot of panic, a lot of drama. You know, the market went down hundreds of points. Now you look at it after 2 other days, and it's back to within 100 points of where it was. So it does go to show you that the market gives you opportunity. I don't expect the market to all of a sudden just forget about Brexit overnight here, but I do think that calmer, cooler heads prevail, and you understand that, you know, some of these companies that stocks prices went down, there's no reason for them to go down based on this, because let's say you're just a company doing domestic sales in the United States only, and you're selling plants and yard lawn stuff for homes. You know, this doesn't matter to you. It's not going to affect your business at all. So there is opportunity out there.
Yeah, and I know that the stocks took a couple of days of big tumbles. Have those numbers recovered all the way on the Dow Jones, Clark?
Yeah, the Dow's recovered to within 100 points. Yes.
Oh, okay. And we've been near record highs anyway, right? So I mean, this is our 401ks are not 201ks is basically what you're saying because of Brexit, at least so far.
Exactly. It's interesting to say the market's probably not had a good year reputation-wise, but you look at where the Dow Jones is, and you say, hey, you know, we're not far away from an all-time high at all. And as a matter of fact, a lot of people say if it does get over 18.3 or 18.5, you know, look out, here we go. So, you know, it's interesting how the market can be so negatively talked about, but at the same time, it's doing pretty well.
We're talking to financial strategist Clark Hodges. Okay, we've kind of watched this. A lot of us have waited it out because that's what we're told to do if we're not all involved with the day-to-day buying and selling. What's next? What do we do now? Is there anything in particular we need to do, or just keep staying in it for the long haul?
Well, my suggestion would be staying in it for the long haul. A lot of people follow the market too closely. There's too much news about it. 20 years ago, when you opened up the newspaper, that's how you found out what your stocks did the previous day. Now it's every second of the day, it's scrolling across the TV screen. And what it creates is too much coverage, too much opinion. That opinion sounds really good, and at the same time, it really changes people's forecasts. I mean, trading is really what these TV channels are all about. Stock trading, not stock investing. And there is a difference. And if you have a 401k, you're an investor. You're really in it for the long term. And so trading your 401k is not a wise idea. And I don't know any billionaire traders, but I could name you several billionaire investors. And so this is just a time where you stay calm, you don't panic, you don't react, you just take the news in. And if you look up at your favorite stock and you say, hey, that stock was 10% higher the other day, now I can buy it again, add to my position because I'm going to own it 3 or 4 years from now. You're buying something on sale. And Warren Buffett likes to say the only thing in the world that people don't buy when it's on sale is stocks. If filet mignon goes on sale at your supermarket today, you're probably going to go buy some.
That's a great.
Stocks are on sale, you run from it.
That's a great point. Now, Clark says he doesn't know very many billionaires, but I will tell you this: I got your back covered. I know a lot of thousandaires, Clark, and taking a look at these 401ks, and you brought up a great point about just keeping an eye on the big picture, because it looks like in this Brexit, there are so many things in which we can get caught in the weeds on, because there are going to be different elections regarding within the parties of leave, and then also the prime minister itself. So there's going to be a lot of news out there and a lot of speculation that, hey, this is going to affect the stock market, when, heck, we don't know if this is going to be a 2-year deal or a 20-year deal, do we?
Right, and it could affect the stock market, but take a company here in the United States, take a restaurant chain. It's only here in America, okay? How is Brexit going to affect that restaurant chain? You and I are still going to go out to eat. You and I are still going to go to the movies. When the next iPhone comes out, I'm probably going to buy it. I'm still going to go on vacation with my family next summer. I'm going to buy an airline ticket the next few weeks. I mean, nothing like that will change what I do. But if I'm an international banker and currency is very important to me, I'm probably not real excited about going through the Brexit the next couple of years because that situation could be different. I'm an international bank. I've got assets in the United States. I've got assets in the UK. I've got assets in Europe. So that's a different story. So that sector may be weak, but there's going to be plenty of sectors that you does not even affect. A lot of small cap companies, and at Hodges Capital we have a small cap fund. A lot of small cap companies, they don't have any exposure to Europe and to England, and so it's really no big deal at all for them.
All right, Clark Hodges, financial strategist. Thank you so much for joining us on Memphis Morning News. That's great advice and a little bit of wisdom. We can always use that, especially when we have a big shakeup like they're going to be having in Europe. Thanks so much.
Thanks for having me. Y'all take care.
Same to you.